Hello, good morning. It's Thursday the 10th. I'm FX Blue and this is the market brief. So old Boris has been on. He's announced the end of all the remaining COVID restrictions. He kicked off Prime Minister's questions yesterday by announcing that the UK is on track to remove the latest and last restrictions in about 2 weeks, which is at least a month earlier than planned. Now, of course, this has triggered questions about whether this is based on scientific advice or if it's bluster from Boris, gambling that a bit of good news could help prop up his damaged reputation. But anyway, now COVID is out of the way again, or at least season 3, Omicron, is fizzling out, we might be able to get past those issues and see the supply chain issues caused by Brexit once again. Fears remain that Brexit will still be a major hurdle to UK growth and output. In 2021, for example, UK exports to Germany fell by 8.5%, and many businesses have attributed that drop to a level of friction brought in by Brexit. The hope is, when COVID is less of a concern, more of the Brexit red tape can be removed. We'll just have to see. It's been a pretty quiet week in the market so far, ahead of any data that may contribute to central bank action. Q4 GDP data is expected to show growth has fallen slightly from the 1.2% to around the 1% level, while industrial and manufacturing productions are expected to show steady growth continuing in those sectors. Meanwhile, though, sterling is in a pretty narrow trading range. We open around 135.30 against the dollar and about 118.50 against the euro. Over in the US, we have inflation data out today. Forecasts suggest the headline number will be up to 7.3%, up from 7% in December. And core inflation, which strips out the more volatile items like food and energy, is called to be up at 5.9%. That's up from 5.5%. And the continued robust inflationary growth could see the Fed really get cracking with a 50 basis point rate hike. It would get them off to a strong start and would also act as another statement of intent that they are very serious about bringing inflation back under control now. The only real reservation is that some analysts are suggesting inflation could start to ease naturally by the end of Q2. That's because the rate of increase is starting to slow in some sectors. But overall, the Fed will need to raise rates more than 0.5% to finish a job, so any risk of overshooting straight off the bat is pretty limited. The dollar index gave up a little ground yesterday in the market in a pretty quiet day. Ahead of today's data, that closed at 95.55 yesterday, and indeed euro dollar opens this morning around 114.25. So that's it from me. Have a great day. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FX Blue.